So I'm learning all the time. The purpose of it is to understand reality. Because as a fundamentalist trader, the closer I am to reality, the more money I make. The better I understand how the world works, the more money I make.
Courtney, welcome to the podcast. How's it going today?
I'm doing great.
That's awesome. In spite of the trouble we have with the recording, so you're in the in UAE, in the United Arab Emirates, which is pretty cool. I've never been there before, so that's cool.
I just flew here yesterday, and I was in the 3 different flights, 20 hours in the air. So it was about a 24-hour trip to get here. But here I am. I'll be here for the next few weeks.
Perfect. That's really awesome. So for people that don't know you right now, tell people who you are and a bit of background about yourself.
Well, I've been a professional trader now for almost 50 years. I really started in 1971 was my first real job in the industry, and I've been a professional trader ever since. But I've done it through different ways. Sometimes I work for big institutions, and for the last 20 years, I've just been supporting myself as a trader. So I've managed the #1 performing growth mutual fund in the world, the #1 global macro hedge fund in the world. I wrote the #1 performing stock newsletter, the #1 futures newsletter. I've been on TV over 1,000 times. I've written 10 books on trading. I've been around the block. I've spoken to hundreds of thousands of people. Right now, I trade, and I also teach people how to trade.
That's awesome. A lot of good accomplishment for sure. So I want to go back in time, and you mentioned 1971. So that's quite some time ago for people that maybe started to trade recently. So tell me, how did that happen? How did you get involved in trading in the first place?
I was very interested in philosophy, and then I found out you can't make any money in it. So I said, well, psychology is applied philosophy. Then I found out you couldn't make any money in that either. So then I said, well, what about economics? Economics is applied psychology. So I got into economics, and I said, well, there's different economic theories out there, Marxism, capitalism, monetarism, whatever. Well, whichever one is the best theory should be able to predict markets better than any other theory. So I felt that you could empirically test economic theories by looking at currency movements, the price of gold, and so that's actually how I started trading.
Nice. So did you start trading on your own, or did you get hired by a bank or work for a firm back then?
No, I was living in Vancouver, Canada. There were no banks that traded there, and only a few in Montreal and Toronto at the time. That was back when the Bank of Montreal's headquarters were actually in Montreal. They're not anymore, um, but basically, no, I started trading on my own, and then I did get a job a year later. Actually, I started trading in the 60s when I was in high school, and then in the early 70s, I got a job as a research director with a newsletter.
All right. And so how did that transition to you trading either full time or more successfully after? How did that turn out?
Well, I just started trading, and one of the things that I was very fortunate is that there was a huge bull market in 1973, 74. It was one of the worst bear markets in the stock market, and it was one of the biggest bull markets in raw materials such as gold, soybeans, and of course crude oil because of the oil embargo. So I was very lucky to be able to participate in that and make enough money that I could retire. But I became fascinated with trading, and I said, well, I said, look, I don't really know what I'm doing, but I just made a lot of money. So better lucky than smart. But I figured that if I actually knew what I was doing, I actually could have made a lot more money. So that's when I really started seriously getting involved in researching and testing to try to make money in the markets.
And how did you learn all these things? Was it like you by yourself trying new things, or did you have any mentor or people guiding you?
I never met anybody who was another trader until the late 1970s. So there was no mentors at the time. There's very few people trading. At the time, there was only a few books written on futures trading, which was what I was mainly focusing on. Larry Williams had written one book on stocks and one on futures, and then you had Charles Keltner had written How to Make Money Trading Wheat or something like that. Anyway, there was no books on the subject. The only one I saw at the time was Larry Williams' book. So a lot of it had to do with just having to, as I say, I have a PhD from the University of Hard Knocks. So you just got to go out and you got to do it. There's no books, no mentors, no newsletters, nothing really.
And how was the learning curve?
Well, it's when you don't have anybody who can jumpstart what you look. I teach classes, so people come to my classes, they spend 2 years. That jump starts their learning by 10, 20, 30 years. I had to do it all by myself back then, and then in the mid 70s, one of my friends who was a mathematician, we then formed a partnership and started managing money for other people. I forget when it was, but in the mid 70s, something like that. So he helped teach me a lot about mathematics because I didn't know much about math at the time. I was good at it, but I didn't know much about it. So really, you got to go in there and you got to say, how could I have predicted this move? Okay, big bull market. How could I have predicted it? Well, could I use a moving average? Could I use a channel? Could I throw darts on the wall? In other words, everything had to be empirically tested in order to try to figure out what works and what doesn't work.
How did you test back then? Because of course you didn't have any kind of computer to kind of look back at a chart like today. So did you kind of look at printed charts or something of the sort?
Well, yes, but you got to realize is you had to draw them all by hand. So in other words, it was chart paper and a mechanical pencil. But it was around 1974, 1975. I got a research paper from a researcher at Merrill Lynch named Ted Hockheimer, and he had back tested a number of trading systems that were in a report written by Richard Donchian in 1961. And so what happened is that Hockheimer said, I can't believe these systems are as profitable as Donchian says they are. So he back tested it, and they were all incredibly profitable. So me and my partner, we said, it can't be that easy to make this much money. So we said, we have to back test these things. So we went out and spent $10,000 and we bought a database, 30-year database of data, open, high, low, close, volume, and open interest, okay? So then what we did is, of course, computers are only huge mainframes. We barely were starting to get into mini computers, so forget PCs. So are you ready for this? My partner and I went back to university in computer science so we could get access to the computers. So what we did was we went back, they gave us all our assignments, we did them all in the first week, and then that meant we had the whole semester access to the computers. Now we had to use punch cards, but okay, you got to do what you got to do, right? So at the end of the first year, they said, well, now you're in year 2 of computer science. You actually have to do computer science, not just programming. So we quit and went to another university. This is all in Vancouver. So I went to University of British Columbia, Simon Fraser University, and BC Institute of Technology. No degrees from any of them, but just so we could get access to computer time.
That's so awesome. I've never heard that before. That's a really cool story. That's really awesome. And so, what kind of trading style did you focus on back then? Was it more like higher time frame or more intraday? And I guess that wasn't really a thing back then.
I couldn't do intraday because my price data came in the Wall Street Journal 3 days late. So it had to be position trading. But what happened is by the late 70s, we were also, and once again, I'm mainly in futures. I really got involved in spread trading, which is where you're trading the difference between two contracts. So it could be March corn versus July corn, or it could be March corn versus March wheat. So, and I ended up, anyway, I wrote a book called Commodity Spreads because of that. So that was slow motion trading, right? I didn't have to trade quickly. So there was no possibility of me doing intraday trading. And I didn't do that until really 1980 was when I started doing intraday trading because I had access to real-time prices. I went to work for big institutions starting in 1980.
What kind of things did you look at back then, and how does that compare to things you look at today on a chart or on a future or whatever? Is that the same, or does that change?
Well, I would say the basics are the same because I like to use fundamental analysis, and and remember I started from philosophy, psychology, economics, trading. Okay, so my background was in economics, so that's why, as I mentioned, I had the #1 global macro hedge fund in the world. So global macro is a style I feel very comfortable with, and so I like, I'll read a dozen newspapers a day. I read trade journals. I read government reports and so on and so forth. So I do a lot of global macro. I do a lot of fundamental analysis of different things, stock market, bond market, foreign exchange, but also some raw materials. Um, uh, and then technical analysis. I started out with Dantian techniques, which are channel breakout, the turtles made famous, but I was doing it. I don't know if I was doing it before the turtles or around the same time. I didn't hear about them until later. But channel breakout, at the time I was using moving average crossovers and stuff. But so my techniques are obviously much better, but the basic idea of combining fundamentals and technicals remains the same.
Awesome. And how did that evolve? So you mentioned you were trading for yourself sometime and then for investors all the time and for big firms. So what kind of job or task did you have to accomplish for these firms?
Well, it's very weird because, for example, my first job on Wall Street was working for Payne Weber. Payne Weber is now called UBS Securities. UBS bought them. And I started there as a portfolio manager. But for various reasons, namely the first portfolio manager failed, they decided not to give me a portfolio to manage. So I ended up being the research director. So I got together a big research team, and we started making a lot of money with our research tips. And I'm very proud that the people that I hired, most of them have gone on to tremendous success in the field. One of them is the chief bond strategist for Charles Schwab. Most people on this podcast will have heard of Jack Schwager. I hired Jack Schwager when he was just starting out. So, and the others are in their field, in the energy field. The guy I hired is a very, very senior consultant, and so on and so forth, but are not household names. So that's really, I just built a great research department, which when you run a research department, you get to learn a lot because now you have money from a big institution that you can spend on research. So that was very helpful in my education as well.
How would you compare working for a firm like this as opposed to trading professionally? What are some of the differences and maybe things you like and didn't like about both?
In the 1980s, I was head of global derivatives trading. I was the treasurer of a Swiss bank. I was research director for a couple of different firms. I was the CEO for a couple of brokerage firms as well. I think trading as an institution back then had a lot of advantages that a private individual didn't have then. Private individuals didn't have access to real-time prices or real-time news. Those advantages are gone. A private individual has the same price feed that the biggest institutions do. Back then, I would pay $60 to execute one futures contract. Now that's $1 or $2. Now $60 plus inflation. We're probably talking $300, $400, $500 per contract. Well, it's hard to make money when you have that big of a transaction cost. Stocks, you had to trade round lots, so the transaction costs are minuscule now. So a lot of the advantages that the big institutions had, they don't have anymore. So now I prefer being an individual trader than an institutional trader. The problem with being an institutional trader, even today and then, is you have to specialize. Let me give an example. So I'm research director at Payne Weber. So every day I'm on the squawk box telling the brokers what my opinions of the market are. And so, and I'm doing a pretty darn good job at it. Okay. I'm calling the markets really well for the brokers so they can help their customers. But I never wanted to be a researcher. I wanted to be a trader. So finally, I said, after a few years of being research director, I went over to the proprietary trading desk and I said, hey, I want to be a prop trader for you. And they said, oh, great, Courtney, we love your work, fantastic. You're calling the markets great. We'd love to have you. You'll be a 5-year note trader. And I'm going like, what? I said, I'm not a 5-year note trader. I said, I trade, I go where the action is, you know? So no, we want you to specialize in the 5-year note. And I'm going, the 5-year note's boring. I don't want to be a 5-year note trader. It's boring. And what you're telling me is my bonus is going to be based on the volatility of one instrument. No, I need to go trade pork bellies, or I need to trade foreign exchange, or I need to go where the action is, because that's how I can make a lot of money. Nope, that's not the way institutions think. They want you to be in a little niche. And so when I worked for heading up trading desk on Wall Street, I was fortunate because I headed the desks. I never actually worked as a trader for any company. So I just jumped right to the head of the trading desk, which meant I got to trade everything.
That's awesome. That's pretty good. Something I didn't know either at all. So, is it a good thing to be able to specialize? Do you think you're better when you specialize into something, or do you think that you can be as good or better if you do, or if you trade whatever you want to trade, whatever the action is in?
I mean, look, obviously, if I had become a 5-year, look, eventually I was doing the same thing. I had people that specialized. And but you got to realize when you work for an institution, you're not just a speculator, you're often a dealer. So the knowledge you get is who buys a lot of 5 years, who sells a lot of 5 years. But really, my career, even though I've run huge market making businesses, option market making, bond market making, derivatives market making, even though I've done that, my passion is really speculation. Well, that dealer doesn't know anything about where the price is going to go in the 5 year. I know where the price is going to go, but he knows who's buying and selling, so he can make a market. And so the specialty knowledge is very, very good. So they can end up knowing a bit more. But let's face it, the 5-year could be in a boring sideways market for 3 years. In the meantime, I'm going and trading soybeans or stocks, IBM or Google or soybeans, or you can make a lot more money being an individual trader because you can go where the action is instead of being stuck in a boring instrument.
It seems that in many aspects, trading now is kind of easier because the cost of entry are much lower, so you don't have all these commission to pay and everything. But I'm sure people nowadays they still face the same challenges as before or other challenges. So I'm curious to know your students, what kind of challenges do they face most of the time when they trade?
It's all between the ears. Really, I will go. I'm here in Dubai. I'll be teaching a couple of classes, one probably 50 people, and the other one about 2,000 people. And I always ask the same question. And I get up there and I say, how many people have traded? They all raise their, probably 75% will raise their hand. And then I'll say, would you agree with me that the psychology is the hard part of trading? Their hands always go up. All over the world, it's the same answer. Yes, the psychology is the hard part. Knowledge is easy to get. You don't need a lot of capital. You can open a micro Forex account for $10. So you don't even need capital. Knowledge, read books, go to classes, go online. Knowledge is trivial to get. Um, the hard part is psychology, actually doing it. What happens is, and this is very, very typical, I'll teach at one of my seminars, 2-day seminar. At the end of the 2-day seminar, I've covered psychology, risk management, and entry and exit. And if it's a stock one, I'll even teach how to pick great stocks. Now, if there's 100 people in the room, what percentage will actually trade? It's less than 50%. 60% of the people who paid me $4,000 to come to a class won't even actually use the information. It's between the ears is the hard part. The knowledge, that's trivial. There's a million ways to skin the cat. So I think focusing on psychology is the most important thing you can do.
So, what are your thoughts on this? Is that something you can teach people, or is that something that they have to be clear on by themselves?
Both. When I teach the psychology, I actually have a course called the Psychology of Massive Wealth. I think that there's a lot of really useful information in there. And when I teach it to people, you can see the light bulb go on. So I can bring the horse to water, but still that person has to actually do the stuff. So it's a combination. I can jumpstart them, but I can't in the final analysis change their mind. But it's the same thing. I can teach them techniques that make money. I can have them back test the techniques and they see, oh, it makes money. Are you trading it? No. What? We'll trade it. Human psychology screws it up. You know, trading is a very, very, very easy thing to do. Requires very little knowledge, very little money. It's super easy. We as human beings are the ones that screw it up. We make it hard. So everybody's out there. You go look at a bookshelf and you say 90% of those books are on here's a technique, here's price behavior, here's seasonality, here's whatever it is, a million different techniques. Great. So what? You got to do them. So here's what happens. And maybe you've had this happen in your own life, but everybody before they put the trade on is cool, calm, and collected. Then once they put the trade on, their IQ drops to the same as their shoe size. Okay. And now getting out of a trade, everybody's, oh, getting out of the trade is a hard thing. What are you talking about? You got in the trade because of this technique. Use the same technique to get out. They don't. They override the technique, even though they know that technique is a proven system. They'll screw it up. That's what happens to most traders. They screw it up. The system's fine. Oh no, Courtney, the market makers, they're picking me off. They're stealing from me, you know. Oh, bad luck. I mean, get out of here. There's no luck at the end of a year. No luck. It's 50-50. And by the way, you know why I know the market makers aren't picking off your trades? Because they're too busy picking mine off. No, just joking, just joking. All right, but the point is the hard part is between your ears. It's not the intellectual knowledge. The intellectual knowledge is trivial.
Yeah, that's a very important part. And I think some people don't focus on it enough, or either they think they focus on it, but then they don't take action. So the thing is, even though you learn about psychology and the mindset, you might not take action either. So it's a funny phenomenon, definitely.
That's right. That's right. Like I say, everybody's smart before they put the trade on, and then their IQ drops dramatically once they put it on.
Yeah, it's interesting. I know this is probably a hard question for you, but if you had to pick like one lesson or one key concept that you really like to teach people, what would that be?
Are you talking about in terms of psychology or in terms of trading in general?
Trading in general. So anything that comes to your mind.
Discipline. Discipline. Because first of all, the way I approach markets, and I would highly recommend everybody else do it, is to find an idea, but it has to be an idea that can be tested. So it can't be Elliott wave because nobody knows. You can't back test it. So something like Donchian systems, like channel breakouts, you can back test them. Do they work? Do they not work? So test, back test. Once you've done that, now you have a proven system. Now all it takes is the discipline to follow that system, right? Just follow it religiously, no matter, I don't care what you think, I don't care what your brother-in-law thinks, just follow it, discipline. Because now the system is accountable, it's provable, it can be adapted, but you have to have the discipline to follow.
Speaking of adapting your system, how would you make a system better? Let's say you test something and it doesn't work as good as expected, and the results are like close to 50-50. How would you make it better? What would you look at?
It depends on what the problem is. I look at most systems, and I'm basically a system type trader. All my entries and exits, or 99% of them, come because of a system. Okay, like it crosses this, I buy. Okay. It depends on what the problem is. So, for example, one of the things I do with my coaching customers, for example, is that they'll go and they'll do a back test, but every month we go through their actual trading performance. So you start to learn certain statistics. So the two basic statistics are, what's my percent reliability? In other words, what percentage of my trades are winners to losers? And then the second one is, what's the ratio of my average winning trade to my average losing trade? And then there's other statistics as well, largest drawdown, et cetera, et cetera. Okay, largest string of losers. So you look at that and you start to say, well, if I'm making money on 55% of my trades and my average winner and my average loser are the same size, I got an edge in the market, but it's not a big edge. So now you have to attack, how do I make those one or both of those statistics better? Well, generally speaking, if I can stay in the trade longer, my ratio of average winner to average loser will get bigger. Okay, that's why position trade systems, the average winner's got to be 2-3 times bigger than the average loser. A short term, a day trade or swing trade, you're going to have 50-50, 55, 45, 60-40 reliability. But if I can get my average winner from 1 equal to 1.2 or 1.5 times my average loser, then I have a big edge in the market. Do you see what I'm saying? So you have to start to attack, and there's different techniques to attack each of those statistics.
Mm-hmm. So it's really about like pinpointing the thing you want to work on or improve, and then finding out things around that.
Correct.
And once you do this, what would you do? Would you look at like ways to make it better based on your actual trading data, or would you kind of do a new backtest of these new parameters to figure out what's the best thing to do?
Well, whatever you've got. Obviously, your own personal trading would be the best data because it's your data and it has to do with how you approach the market. But a lot of people, particularly if they're starting out, they can't do that, so they have to backtest.
Mm-hmm.
Let me give you an example. A student came to me with a technique. It was profitable, um, uh, not wildly profitable, but it was profitable. And so I said, well, okay, one of the things you can do is add a trend filter. So in other words, I'm only going to take, he was taking buys and sells. From now on, I'm only going to take buys if like the 10-day moving average is going up. Okay, so now there's a trend filter. Well, it dramatically improves the profitability. Because if you trade in the direction of the trend, your ratio of the size of your average loss to, the ratio of your average win to your average loss is always going to go up if you're trading only in the direction of the trend. Now, you may end up actually making less money because you're cutting out half your trades, but nonetheless, you're going to be psychologically a lot better off because your average winner is much bigger than your average loser, and your percentage of winners to losers will go up too if you put in a trend filter. And most techniques work better if you add a trend filter to them.
Funny you mentioned this because I found, at least for me, that like the way I improve my result is by removing trades, like not adding trades. Some people would like you add more trades, trade more things, but for me it's like reducing the number of trades by trading less pairs, some filters, less time frame, things of the sort.
That's correct. Usually reducing. I always tell people that I work very hard at not trading, not trying to find trades, but trying to not do trades. Talk myself out of trades rather than talk myself into trades. Yeah, much better. Trade less is usually when people trade, they trade particularly when they start out, they want to get every single trade. Well, don't get all the best trades, but don't do any of the mediocre or weak trades.
Do you have a particular like favorite trading style? Is it more like trading breakouts or trends or reversals, or do you trade like many different things?
I always tell people I'm a trading slut. I'll trade anything, anywhere, any time frame. I don't care. I trade every style, every instrument. I trade stocks, options, futures, forex. I day trade, swing trade, position trade. I don't really care.
So how do you keep this all organized together, where you don't like forget things or
I just use an Excel spreadsheet where I call it my trade tracker. It has all my orders, all my trades on it, but one column is the technique. So I always know why I'm in the trade. Okay. I also have a note column that says maybe I have a fundamental bias, maybe I don't have a fundamental bias. But there it is. And I know where my entry order is, where my exit order is. I go through with my broker once a day to make sure that they coincide. And that's it. Now, day trading, I don't really use the trade tracker for because I'll be out before the end of the day. I just use a piece of paper sitting next to me. And I started using this when I was a market maker back in the early 80s. And it's a T with the buys on one side, the sells on the other side, and running down the middle is the running total of what my position is at that moment after every trade. So I can instantly see if I'm long or short. If it's a positive number, I'm long. If it has a minus in front of it, I'm short. But my buys are on one side, my sells are on the other side, and at the end of the day, I have my position. I start a new sheet. So it's very easy. Uh, Once again, people make it hard. I don't want to be a bookkeeper. I want to be a trader. I want to make money. But let me go to a meta level here. My philosophy is I only do what the market tells me to do. That's it. So when I trade, I'm very humble. I'm not trying to be right. I know that sounds crazy. I'm not trying to be right. I'm trying to do what the market tells me to do. So if it's a bull market, I want to buy. If it's a bear market, I want to sell. Let's not make this hard. But the biggest problem most traders have is they fight the market. Well, guess what? You're always going to lose. But they'll buy something and it'll start to go against them and they'll hang on and they'll hang on and they'll hang on and pretty soon they have a big loser. Really? The market told you to sell. Just do what the market tells you to do. Don't have any ego at all. Don't try to be right. Just make money. That's your job. Make money. So what happens then is that what I do with my trade trackers, I put the trade there. And then when the trade is completed, I copy and paste it onto tab 2. And once a month, I go through and analyze all my trades once a month to make sure that the techniques that I'm using, which are all proven techniques, are still making money. And so I use a very scientific, mathematical, rigorous approach, but I don't want to be a bookkeeper. Now, once again, let me go to the meta level. I realized that what I am is not a trader. I am a manager of trading techniques. That is to say, here's a series of techniques, and all I do is manage them. I'm really just an order taker for the techniques. If I think that I'm a trader, then I think I'm some big deal. But if I think I'm just an order taker for a system, it makes me humble. Humbleness is how you make money. I had the fortune, I was hired by two of the greatest traders of all time to coach them. Michael Marcus, and Marty Schwartz. Look them up. Marty Schwartz has the best documented track record of any trader in history, 1,000% a year, 7 straight years. They're both in the Market Wizards book. Michael Marcus turned 30,000 into 80 million. I mean, these are both incredible traders. I worked with both of them for 18 months, okay, coaching them. They're both better traders than I am. There's no question about it. But Tiger Woods has a coach. You know, every top athlete has a coach. Well, they're smart. They hired me as their coach. Am I a better trader than them? No, not even close. But the point is, both of them were very humble. If you passed them on the street, you'd never know. Because all they did was focus on making money. They didn't focus on their ego. They didn't focus on being right. They focused on making money and making money only, period. And if they were wrong, they never thought in terms of they were wrong. They just said, I got to get right. I got to get the right position on. I got the wrong position on now. I got to get out and get into the right position. That's humbleness. They did what the market told them to do, and that's all.
Mm-hmm. And that what you mentioned, the fact of seeing yourself as a manager made such a huge difference for me too, because I used to like be stressed or be angry after every bad trade or every losing trade. But once you switch to being a manager or project manager or whatever, then you're more likely to do the right thing because you're just following rules, and that makes much more sense.
We say in our school, follow the rules and execute flawlessly. How can you lose? You can't.
Yeah.
If you have a proven system to start with, that's all you need to focus on. And where, people fall down is they don't follow the rules of a proven system and they don't execute flawlessly, even though they have a button. And when they press the button, $100 bills come out. But they'll go to press that button and then they'll go, nah, I think I'll press that button over there. What are you doing? $100 bills comes out when you press this, but people will go do something else. That's just crazy.
I think with practice and once you see the result, then you cannot go back to doing the wrong thing.
Yeah.
Yeah, that makes sense. Awesome. So, Courtney, I want to respect your time, but where can people find you if they want to connect with you or reach out after this interview?
CourtneySmith.com.
Awesome. And what kind of goals do you have for the future?
I don't. First of all, I never set monetary goals because the money I make is given to me by the market. So I can't control the outcome of my trades. I can only control the process of my trades. So to me, it's, I remember I was running global derivatives for Banque Paribas. This is back in the 80s. And I stood up in the room. I had 65 traders in the room. And I stood up and I looked around and I said, oh my God, I'm the third oldest person in the room. And I was 38 years old. And it was like I said, I want to keep trading until I'm an old man. Well, now I'm pretty old and I'm still trading. So that's my main goal, is to keep on trading.
It's awesome. And what's the motivation for trading? Is it still something as it was before in 1971, or did that change?
One of the great things, as I mentioned, I'm not just a pure technical trader. I'm a fundamentalist as well. And so, and as I say, I trade futures, Forex, stocks, options. So I find that once I add the fundamental into the trading, it's infinitely interesting to me. So, I'm in the UAE. Well, I can now read all the local Gulf papers, and I'm going to learn a tremendous amount about how they see the oil market, the battle with Iran. Do you see what I'm saying? So I'm learning all the time, and the learning, the purpose of it is to understand reality. Because as a fundamentalist trader, the closer I am to reality, the more money I make. The better I understand how the world works, the more money I make. So I look at the world in a very different way because I'm a profitable trader. Do you see what I'm saying? So I talk to people and they're saying stuff and I'm going like, that's not the way it is. Put some money on a trade and guess what? You'll focus on reality much quicker. But most people, it's just blah, 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 blah. They're talking about stuff they don't know anything about. The way you learn the quickest is put a trade on because that focuses the mind, okay? But I love to learn, and being a fundamentalist enables me to learn all the time. Every single day I learn more, and I love that. Really, what's a better job than that? Getting paid to
That's
learn?
really cool.
Come on. And you got to realize I have the most amazing lifestyle. So I'm here for 3 weeks. I spent a week in Tampa, Florida. Before that, I was 2 weeks in Istanbul. I'm going to Manila after this. I'm spending a month in Bangkok. I don't have a house. I always tell people I'm homeless because I live in hotels, but I get to go anywhere in the world I want to go. What other job can you do that? Freelance writer maybe, but they don't make as much money.
Exactly, yeah, that makes a lot of sense. It's perfect. So, Courtney, I have one question that I ask all my guests at the end of the interview. So, the question is, if you could give people one piece of advice on how they can thrive as traders, what would that one piece of advice be?
The process I would do is find an idea wherever you get it. Books are almost free. Find an idea, but make sure that it is an idea that is testable. Many chart services have free 10 years, 20 years, 30 years of data. Backtest and see how well it did. Once you found a proven system that works and is emotionally fits your psychology, then execute flawlessly. Follow the rules. Do not deviate at all. That's the only way you can really make money. Very few people are born traders. You can learn to be a good trader.
Love that. Awesome. So, Courtney, thanks so much for being here today. It's been a pleasure, and I look forward to catching up with you soon.
All right. Thank you very much.